I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. ABC News reports fired acting Deputy FBI Director Andrew McCabe oversaw a federal criminal investigation into Attorney General Jeff Sessions nearly a year ago. That probe reportedly looked into whether Sessions withheld information when testifying before Congress about contacts with Russian operatives. President Trump is defending his decision to congratulate Russian President Vladimir Putin on his re-election, saying his predecessor Barack Obama did the same in 2012. Mr. Trump tweeted, quote, "Getting along with Russia is a good thing, not a bad thing, and Russia can help solve problems from North Korea to the coming arms race." Authorities today searched the home of Texas bombing suspect Mark Anthony Condit. Police say he blew himself up inside his car as they closed in this morning. Authorities believe he was behind the 5 explosions in Austin and suburban San Antonio. Condit's motives and whether he acted alone are still unknown. It's the first day of spring, and the eastern U.S. is being greeted to yet another nor'easter. New York City is on pace to get between 10 and 14 inches. It's the 4th storm to hit in 3 weeks. Thousands of flights have been canceled. The worst of the storms expected after sundown. Global news 24 hours a day. I'm Mark Crumpton in New York. This is Bloomberg.
I'm Caroline Hyde in for Emily Chang. This is Bloomberg Technology. Coming up, Zuckerberg breaks his silence after Facebook's muted response to the Cambridge Analytica fallout. Our deep dive into the crisis mode at the world's biggest social media platform. Plus, Musk gets his money. After shareholders approve a $2.6 billion compensation package, will map the road to a potential $50 billion in executive pay for the Tesla founder. And Tencent doubles on profit and revenue is up 50%, but celebrates the good news with a warning. We'll look at the latest earnings report as Asia's most valuable company. First to our lead, Facebook is in the midst of its biggest controversy to the date, following reports that the personal data of 50 million users were obtained by an analytics firm that helped elect President Donald Trump. Now, lawmakers and regulators in the US and the UK are now scrutinizing the social media giant, whose shares have dropped dramatically since the news broke on March 17th. Meanwhile, CEO Mark Zuckerberg broke his silence. In a Facebook post, Zuckerberg wrote, "We have a responsibility to protect your data. And if we can't, then we don't deserve to serve you." Bloomberg's Sarah Fryer and Max Chafkin wrote about what's been going on behind the scenes at Facebook over the past week in the current issue of Bloomberg Business Week. And they both join us now. Welcome. And Sarah, I really want to start with you because the latest that Mark Zuckerberg has said, the statements, what really caught your eye?
So a few things. He is, as people hope that he would, outlining concrete steps here to try to make sure that this doesn't happen in the future. Among those steps are things that seems like Facebook should have done years ago, which is they are going to restrict developer access to your data if you haven't used their app in 3 months, for example. These are issues that have to do with developers and their apps on Facebook, as is related to the Cambridge Analytica scandal. This is not a big privacy overhaul for Facebook more broadly. And Zuckerberg, as many people are noting on Twitter, did not specifically apologize. However, he did say he's taking responsibility for what happened here. And Sheryl Sandberg, also the chief operating officer of Facebook, said she deeply regrets what happened.
So both taking to their own social media platform. I'm digging into our Bloomberg terminal right now because if you type in #BTV and then put in the number 9703, we can see how much of an effect this has had on the market capitalization of Facebook. Sure, it ticked slightly higher today. We're at $492 billion. It's still a lot, but it's down significantly. Max, what's also down significantly is morale inside Facebook, you report.
Yeah, Sarah, in my story, we were able to talk to some people who were at this meeting yesterday with a deputy general counsel. And what was striking there, despite Zuckerberg's statement today, is that normally, Zuckerberg has been the one to be the damage controller, to come out and address employees. And the fact that they put this lawyer in front of the company was a disappointment to some. I think there's a pretty big disconnect at Facebook. It's a largely left-leaning staff. It's obviously based in Silicon Valley. Most of them voted for Democrats. And on the other hand, this is a company that has to be neutral because they want to have, obviously, people from both parties. And so the Trump phenomenon and then this specific scandal presents a bit of a problem for them because it requires Zuckerberg to be balanced, but also cater to these, a lot of bleeding heart liberals who work there.
Talking of catering, now needs to cater potentially the business for the future. And Sarah, talk to us about how the business model now fares from here. Some analysts are talking about radical action that needs to be taken, more radical action than has been taken in the past, particularly regarding how you might limit segmenting of their audience. You might be able to therefore limit any privacy data breaches going forward. Could this knock the business model?
Well, so let me draw a distinction here between what Cambridge Analytica did, which was gather data that was from an app that a developer used in the advertising business model. Cambridge Analytica later used data like that to target people in the Trump campaign. But the advertising business model on Facebook uses a different kind of data through Facebook's actual platform where you can target certain segments. So it's a little bit different, but this whole situation has raised a lot of questions from regulators. So to your question about what the risk is to their business, the risk is that regulators come out and say, we do not trust Facebook's privacy. You need to put more walls in there in terms of how you share data, not just with developers, but also with your other properties like WhatsApp and Instagram. We've seen a lot of this kind of concern in Europe, which has resulted in the rollout of the GDPR rules. In the U.S., we could see something similar, but mostly we're going to see calls for Zuckerberg and Sandberg to testify, for them to come out and explain to Congress what's going on here and really try to educate them. And if Congress then sees problems here, then they can take action.
So regulatory issues abound here. Max, I want to ask you particularly about perhaps the ramifications on you and I and the user. I'm looking at the statement here from Mark Zuckerberg that he put on Facebook, and it says this was a breach of trust. He says, indeed, it was a breach of trust between Kogan, Cambridge Analytica and Facebook, but it was also a breach of trust between Facebook and the people who share their data with us and expect us to protect it. What about, therefore, the feelings of the user base changing? If users stop trusting the data, how their data is used. Before, we were fine to sacrifice data for the product, but that's not the case anymore.
Yeah, I mean, I think a few things are going on. One is that, people, I think you might say that people are falling out of love with Facebook a bit. In North America, which is the core market for Facebook, the numbers, declined for the first time in the most recent quarter, and, engagement's been down. And I think that there is a sense that people are thinking about this company a little differently. Maybe it's going from, obviously, the cool thing that you do with your friends to something that is a little bit more like LinkedIn, something that you just have to do. And I think that changes the calculus in terms of what you're willing to share. The other point is that, as that Zuckerberg statement alludes, there's a lot of data that's just floating around between Facebook and its app developers and its advertisers. And Facebook obviously hasn't done such a great job of keeping an eye on it. And I think that what this scandal brings to the forefront is that just how much of our information is just out there in the ether waiting for somebody to do something with it. And that can be a little bit scary.
Can be a little bit scary. Can be a little bit scary for the whole social media arena right now. And Sarah, you not only cover Facebook, but you cover Twitter as well. I mean, are we seeing calls not only for Zuckerberg to take to the stands, but also other social media giants?
Yeah, Caroline, absolutely. We have seen that lawmakers want to hear not only from Zuckerberg, but also from Google, from Twitter. They want to hear all of tech, explain how this stuff works. Because one of the trends that we've seen happen as people see this crisis unfold, not just this crisis, but also the issue with Russia's influence of the presidential election using social media, they're being scandalized by the way things have worked for years. And they're wanting to understand the things that years ago we just kind of gave these apps permission to do. Now they are so much bigger, so much stronger, have so much power over the shape of democracy in the world. And one of the problems here is that they've taken what works for commercial advertisers, you know, if you're trying to sell someone shoes, and they're doing it for political advertising without much of a differentiator between how they treat those two things.
I mean, it's a fascinating time now to potentially bring up some Twitter reaction that we've seen. I mean, ironically, they're taking to social media to tell us about these issues. But Tristan Harris is, of course, a Google design ethicist. He was, and now what the Atlantic calls the closest thing to Silicon Valley has to a conscience. And he's said that when the stakes are so high, the integrity of elections, agreement about truth, facts, the personal data of 50 million people, I ask employees of all tech companies, what's more important, your loyalty or protecting the fabric of society from eroding? Max, a longer-term question for you. Is this a time of reckoning? Do you think that social media giants have realized how giant they are and are now willing to start to address this a little bit faster and discuss this with the public and indeed regulators at large?
I mean, it's tempting to say this is a turning point. The only sort of counter-argument to that would be that we've had many of these turning points with Facebook over the years, and every time, you know, Mark Zuckerberg, with the help of Sheryl Sandberg when she joined the company, have been able to get past it. I mean, you know, there have been these sort of user revolts from the jump. What feels different here is, as you say, kind of the caliber of people who are stepping up. So obviously Tristan Harris is one. The co-founder of WhatsApp, Ryan Acton, tweeted the delete Facebook hashtag last night, which is just stunning because he is somebody who sold his company to Facebook for something like $19 billion. So you're talking about somebody who's benefited from Facebook in just an extraordinary way, coming out and saying something. That said, Facebook is doing great. I mean, notwithstanding this, this drop in the market cap, I mean, I don't think they want to change too much if they don't have to. So I think that's why there's a bit of a reluctance to come out and do something really dramatic here on the part of Mark Zuckerberg.
We'll see whether he indeed does do something dramatic. Thank you very much indeed. It was great reporting from both Bloomberg's Sarah Fryer and Max Chafkin. Do look at their article in the New Business Week. Now, coming up, the European Union wants to hear from Facebook and fast. We look at how they could punish the social media giant. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on SiriusXM. This is Bloomberg. Now, the calls for Facebook to speak to government officials over the misuse of its data are growing louder by the day. Today, British Prime Minister Theresa May made her demand for the social media giant to provide answers.
People need to have confidence in how their personal data is being used, and I would expect Facebook, Cambridge Analytica and all organisations involved to comply fully with the investigation that's taking place. And I'm pleased to say, of course, that the bill we're bringing forward on data protection will strengthen legislation around data protection and give the ICO, the Information Commissioner Office, tougher powers to ensure organisations comply.
In response to Facebook, the penalties for violating consumers' privacy are far stiffer in Europe than in America. But Facebook will likely escape unprecedented fining powers for the EU that only take effect on May 25th. Now, that means they can avoid paying $25 million or 4% of their annual revenue, whichever is higher. Now, the European Commissioner for Justice, that's Vera Jourova, spoke to Bloomberg's Vonnie Quinn about that exact scenario and just what she expects to hear from Facebook in their upcoming meetings.
I will have I will have several serious questions especially on how this could have happened, whether they have neglected the privacy rules, whether they were careful enough, and whether they were following the rules which should have ensured the trust for the people, because these are essential questions also for the Europeans.
Now, you are curtailed to some extent in what kind of sanctions you could impose were you to find Facebook negligent in some way. You said, though, that you would be imposing really, drastic sanctions. How would you do that?
At this moment in Europe, the member states are responsible for imposing the sanctions. So, for instance, the United Kingdom, in case the breach of privacy rules will be proven, they can impose the sanction up to £500,000. And these sanctions differ from state to state, which will stop in May this year, because we are unifying the rules, including the sanctions, and the new General Data Protection Regulation will enable the member states to impose much higher sanctions, which cannot be applied on this current case, because there is no retroactivity possible.
Exactly. That starts May 25th. Well, you are asking the working group, the 29 working party, to investigate all of this. Have you contacted every single nation in the EU? Are all on board with this?
All the member states are represented in Working Party 29. They met yesterday, and as one, they confirmed that they are unified in launching the investigations in case they find out that the privacy rules and the rights of people in their states have been or might have been breached. And this is a very important moment, because I think that if they connect and if they join the powers, they can take consolidated pan-European actions.
Could this set some kind of precedent, Commissioner? What are you hoping for as an outcome if Facebook were to be found guilty or negligent in some way?
I am not happy at all about this case, because in my view, this is not only about data protection breaches. This is about the threat to democracy and individual freedoms of people. So, of course, this will serve as a precedent for the future. And I can say that in Europe we are ready for these cases, also as for the preventive measures, because, as I mentioned, the regulation is very tough. We require very strict rules to be obeyed in the EU, especially as far as the consent of the people is concerned, because we want the providers to have the consent of people, the people who must understand the purpose, why the data is collected, and what the provider will do with the data. And of course, it is clear that the providers are monetizing the data, but the people must know what is behind that and what are the plans.
Will you be specifically asking Facebook for Mark Zuckerberg to come to Europe and speak before either the Parliament in general or national parliaments?
There will likely come the requests for such hearings. There is a new thing that tomorrow the prime ministers and the presidents of all the member states will gather in Brussels, and upon request of the President Macron, this will be on the agenda. So we can expect also a consolidated approach from the side of the member states' highest representation, and very likely also the national parliaments will require to get the explanation.
That was the European Commissioner for Justice, Vera Jourova, speaking to Bloomberg's Vonnie Quinn. Now, a headline just crossing the terminal. Twitter's Chief Information Security Officer, that's Michael Coates, is said to be leaving the company. This according to reporting from The Verge. Now, Coates joined the company in 2015 and announced the departure about 3 weeks ago internally, but this is now going externally. Remember, this is hot on the heels of news that information engineers at Google and indeed at Facebook have also just been announcing their departures for pastures new. This is Bloomberg. Now, a story we continue to watch. Uber co-founder Travis Kalanick is buying a controlling stake in real estate company called City Storage Systems for $150 million and installing himself as CEO. Now, the company redevelops distressed retail, parking and industrial real estate. Kalanick was ousted as Uber's CEO last year. He's since sold $1.4 billion of the company's stock. Now, Tesla shareholders have approved CEO Elon Musk's $2.6 billion pay package. Now, the electric car maker's board voted in favour of an unprecedented 10-figure award of stock options. If Musk's plan to turn Tesla into a mass-market automaker and one of the world's biggest companies is successful, we could eventually end up with more than $50 billion. Joining us now is Anders Mellin, who covers executive compensation for Bloomberg. Anders, fascinating story that you've got out. And he's already got a significant amount of wealth tied up with Tesla. Why do they think this might incentivize him more?
Yeah, that's the question everybody was kind of asking themselves when this package was announced back in January. Essentially, it's a pretty expensive way to show shareholders that Elon is going to be around for the next 10 years. He's not going anywhere. He's going to remain fully focused on Tesla. And it also provides a roadmap for the company going forward, outlining very ambitious goals to become one of the biggest companies in the world.
Yeah, talk to us about those goals. How do $2.6 billion of options become $50 billion? Where do the revenues and the size of the company need to get to?
Yeah, so the size of the company, there's definitely a goal out there. The option package will vest gradually if the company continues to grow. The top goal is $650 billion, which is bigger than Facebook and Berkshire Hathaway. And the company also needs to grow revenue and earnings before certain items in tandem with growing the market cap. How that's going to be achieved, though, is nowhere to be found in this particular award. So that's led to speculation among some what Tesla is going to do. Is it going to conduct more M&A, buy other companies? And one would imagine that this outlines the plan for Tesla to go beyond electric cars and solar panels because there's no car maker out there in the world that has a $650 billion market cap. But how Tesla is going to get there, we're actually not sure.
And what about those that perhaps didn't like the sound of this payday? Because not every single shareholder was pro it. In particular, the likes of the California State Teachers Retirement System, they voted against it. What are their concerns here?
So the biggest concern that we've heard is simply that $2.6 billion award for one person, that's just too much money. Even though Musk is really integral to Tesla, and CalSTRS recognized that in a statement they sent to us earlier today, saying that we are fully behind Elon Musk and we like what he's doing with the company. We just think that this is a bit outsized.
50 billion. How can that be outsized? Bloomberg's Anders Mellin, great reporting. Thank you very much indeed for joining us. Now, coming up, the Facebook data scandal has wiped out more than $40 billion from its market cap. We'll hear from two analysts with opposing outlooks on where the stock is going next. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. Kirstjen Nielsen and Jay Johnson, the current and former secretaries of the U.S. Homeland Security Department, testified on Capitol Hill about past and present efforts to protect the integrity of the American election system.
Not only is this of extreme urgency to the department, but as you know, we're expending not only extraordinary resources to provide any support at the request of states, but we are prioritizing election efforts and risk and vulnerability assessments for our partners in state and locals over all other critical infrastructures.
The UN Security Council today voted unanimously to extend the mandate for the panel of experts assisting the North Korea Sanctions Committee.
They do an absolutely crucial job. Through their expertise, as you say, we're able to see the ways in which the North Koreans try and evade sanctions and to systematically close those down one by one. So it's really important that we continue that work, and it's that pressure from sanctions and the enforcement of sanctions that has brought us to this moment where there is a political opportunity in North Korea.
The mandate is extended for 13 months. A person in the Paris prosecutor's office says former French President Nicolas Sarkozy has been charged with accepting illegal campaign contributions from Muammar Gaddafi's regime before the 2007 French election. Sarkozy has been in police custody since Tuesday. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Thursday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, we're seeing some gains in New Zealand at the moment. The NZX been trading 30 minutes, currently up 0.25% despite that weak lead from Wall Street. We've got Facebook, though, higher after 2 days of declines, even though the Nasdaq was a little lower. We'll be keeping an eye on Tencent in Hong Kong at the open after fourth quarter earnings beat estimates. Let's take a look at ASX futures, how we're shaping up here for the open in Sydney, weaker by about 0.1%. Trading resumes on the Nikkei today after that public holiday on Wednesday. Futures traded out of Chicago, though weaker by 0.2%. We saw some gains in the New Zealand dollar earlier after the Reserve Bank of New Zealand held the cash rate as expected at 1.75%. This is, of course, after the US Federal Reserve lifted rates as expected. More central bank action to come today from Indonesia, Taiwan and the Philippines. Quick check-in on commodities. We've got gold looking kind of flat. Oil, though, breaking through $65 per barrel. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Now, let's return to our top story. Facebook embroiled in its biggest controversy yet over the exposure of personal data for millions of customers to Cambridge Analytica. The news has wiped billions from the social media giant's market cap. While the price stabilized today, headline risk isn't going away. Here for more reaction, we're joined by Brian Weezer. He's analyst at Pivotal, currently with a sell rating on Facebook. And on the phone, he is Ben Schachter, analyst at Macquarie, with the opposite view, an outperform rating on the stock. Welcome, both of you. Brian, I'm going to start with you from Pivotal Research. Systemic mismanagement is your worry. How is this going to hit the business fundamentals from your point of view?
Yeah, well, let's be clear. I had a sell rating before all of this.
Since July, right?
Yes. When it was around where it's trading now. And the reason for that was because I think most of Wall Street was ignoring limits to growth that all digital advertising faces, and that they're ignoring costs that would be rising and capex that would be rising. And I think people were just looking past this when you go beyond 2020. So we had a lot of issues over the last 18 months that were certainly concerning. We had advertising measurement errors. We had an inability to take down inappropriate content when requested without sending a reporter to the police. We had just a ton of other issues, selling illegal ads and not having processes in place to stop that. And you could look at any one of those things in isolation, and you could say, oops. And then you get this. And you go back and read the original Guardian article from December 2015. And it just lays out this path that was so clearly not followed. And Facebook can claim that, oh, we sent a letter. We sent a letter. That's it. OK, good for them. So it sounds to me like there's some operational problem.
Yeah.
That's a new risk.
Let's get Ben's point of view, because, Ben, you are expecting perhaps more than just letters in the future. You say there could be more radical actions taken, but this won't dent your view that still this is a buy?
Well, listen, I think overall the stock is actually relatively cheap based on what we expect the earnings to be in the foreseeable future. I think there are a lot of really interesting issues raised by a lot of the recent headlines, but my job is to be an equity analyst and figure out what the financial impact of this is. And thus far, you know, we don't see significant impacts. I don't see changing my model dramatically based on these things. So lots of interesting social issues to discuss, some of those which could impact the company. But in terms of the actual financials right now, you know, I think there's a lot of negative headlines, but I don't see a lot of negative impact to the actual financial model.
Respond to that, Brian. Why doesn't it affect why does it affect your
Well, it makes it worse than I would have expected. Now, again, I don't think I'm very far from consensus on current year or next year. So that's not the issue. It's beyond that where I think there's issues in terms of just overall growth. But where I think there are new risks that are amplified when it comes to something like GDPR, I mean, here in Europe, that is the most important thing that will impact digital advertising.
Spell out GDPR, because it comes into action May the 25th. It's EU law.
Exactly. And this is the General Data Protection Regulation. Now, it's unclear exactly how this will play out in terms of what decisions advertisers will make. Ambiguity and uncertainty rules the day, even now among large advertisers 2 months away from implementation, about how you can use data. It probably is negative for the overall industry, but it's not certain. But here's the thing, it's the fines. And if it wasn't clear whether or not the EU would pursue Facebook aggressively, and Google too, by the way, it's unambiguous, they'll go after them. I mean, this is the problem. You get that element of regulatory risk, which you could think, well, maybe they can out-litigate, maybe they can outlast. That's going to happen. And then you can look at the possibility of something like that in the US. Yes, these are tail risks that you can't really anticipate, but they will have to incur more costs to know their partners. They will have to do things that will have the effect of slowing their growth intentionally to manage the business in a way that will prevent these sorts of things from happening. Those will impact the model that we haven't incorporated in my model. Those are risks, at least.
Ben, have you incorporated regulatory risk within your model? Is it baked in from your perspective?
I've been covering the space for almost 20 years. Political, regulatory, legal risks have been around since the beginning, and they're absolutely legitimate, and they are real concerns. However, we've seen the internet and internet advertising in particular grow at dramatic levels over that entire period. And so I don't want to dismiss these. I don't want to get too comfortable with some of these issues. I think Brian raises some very valid points. But the fact is, this is where users are. And as long as the users are there, the advertisers are going to have really no choice but to follow them. If I think these headlines do lead to more people leaving these platforms, that's a real legitimate risk. And that's something we're going to be watching for. But not a lot of these issues are dramatically new. And, you know, the reality is they're not dramatically different than they've been in the past. I think they're getting a lot more focus now. And I think, again, there are interesting social issues to discuss. But our role as equity analysts is to really focus on the model. And there I just don't see a lot of meaningful changes right now.
Brian, I mean, both you and Ben don't just cover Facebook, of course, mainly a stock, and one of them is Twitter. Now, I just want to delve into the Bloomberg here and bring up #BTV if you've got one at home. Check it out on your terminal, #BTV9702. This just shows the impact that we're seeing on Twitter and the cost of hedging Twitter at the moment. We have seen the issues of Facebook have a contagion effect. People are having to pay up more to hedge their exposure on the Twitter stock. What about Twitter as well? What about, you mentioned Google's YouTube? How much could this be a contagious element?
Yeah, I really don't see much of an impact on Twitter or Snap, for example, because of this. It's possible that tertiary players or independent publishers could benefit because they own, and GDPR here is the issue at hand. Anyone who has a direct relationship with a consumer probably does relatively better. But I don't think the regulatory risk meaningfully impacts Twitter or Snap. They're niche offerings. It's not an issue. Alphabet's in a different class, and Google in particular. I think they might be a net beneficiary, and that speaks to sort of a relative point of view that I'd have, which is to say, to Ben's point, advertisers can say, well, where else are you going to spend the money? I mean, the obvious place is Alphabet and Google. So they're relatively better positioned, I think, if Facebook becomes the whipping boy.
Ben, can you respond to that? What about the impact on the rest of the social media giants?
I think overall, these political, regulatory, legal risks are risks for the industry. Can we take this data to better target advertising? How will that work in the context of political advertising? How will that work in the context of some of the issues around news that we've seen? Those are systemic issues across the industry. But again, these are issues that have been around since the beginning of the internet. This is not necessarily dramatically new. I think there's a lot more focus on it today. I think you are seeing new regulations put in place, but I just don't see it really dramatically changing how advertisers are able to use targeting across all these platforms.
And that's why your price target remains at $200 for Facebook. It's been wonderful having you. Thank you, Ben Schatka, of course, with Macquarie. And that was Brian Weiser with Pivotal Research as well. We thank you, gentlemen. Now, coming up, One Social Network CEO is betting big on Bitcoin. Jack Dorsey's thoughts on Bitcoin being the world's single currency next. This is Bloomberg. Now, cryptocurrencies have not been off to a hot start in 2018. Bitcoin, for example, hasn't been able to come close to its all-time highs of December 2017. However, Twitter co-founder and Square CEO Jack Dorsey is staying positive. Dorsey believes Bitcoin will be the world's single currency in 10 years. He's doubled down on the cryptocurrency in an interview published today by The Times of London. Dorsey said back in January that Bitcoin provided an opportunity to get more people access to the financial system. Staying with the current landscape of cryptos, and I want to bring in Bloomberg Technology's Selena Wang now, who is standing by in New York with a great guest.
Thanks, Caroline. That's right. I'm here today with David Drake, the chairman of LDJ Capital. It is a multifamily office, and he's also the head of a crypto-focused hedge fund. David, thanks for joining us here today. So I want to talk today about the Bitcoin rally. We're seeing really a lot of optimism after the G20 conference when we really didn't see a unified clampdown on the currency. So what's your take on this?
Look, it's been a very cold winter. You know, my family's been involved with this in 2011, helping to pass Jobs Act. And I've been saying for a couple of months that it'll be cold winter. Regulators, the SEC, FINRA, they haven't given us guidance yet on how to deal with this. The US is the biggest market in the world, and right now Asia is really hot for cryptocurrencies. But I'd say this year is the cryptocurrency Wall Street time. And like Dorsey said, we said that before as well. We think cryptocurrency on the Bitcoin will be worth $30,000 at the year end. It's limited.
And like Jack Dorsey said, do you think that there will be a single currency of the internet, or are there going to be multiple?
Well, right now you got 1,500, and Ether is taking a hit right now because the other ones chasing its tail, being smart contracts right behind it, like, you know, Stellar, EOS, and NEM and others. They're starting to execute. They're starting to create products that are similar, or at least supplying quicker solutions than Ether's doing. So now they're starting to chase the top 5. So I think we're going to see some changes this year. The top 5 is going to change order. I don't think Bitcoin will change. Bitcoin is capital preservation to me.
So do you disagree with Dorsey then that in the next 10 years there will be a single currency of the internet? It sounds like you think there will be multiple.
Oh, absolutely. There'll be hundreds. Today we got 1,500. I think he might have meant that that will be a acceptable currency on a global basis because it was the first one from 2009. But there's too many out there with great solutions. Yet again, like the SEC said, some of them are fraudulent and they're weird and strange. There's too much hype. We got to calm down a little bit.
And your fund actually invests in many of these initial coin offerings. And of all of the ways you can get money and be funded, it's one of the easiest to run scams on. So how are you screening for legitimate investments?
Well, what I said last year was there was the cryptocurrency era, the year, so to say. And, you know, the revenge of Occupy Wall Street in 2009 was the Bitcoin by the unknown Satoshi who created it. Today, it's crypto Wall Street, I'm saying. This year, public companies, I'm on the board for 6 public companies, and real companies are coming and saying, wait a minute, how do we create more loyalty? How do we create more tracking of what we're doing with our coins? How do we know what's going on? Blockchain underlying cryptocurrency allows you to track anything from the beginning. And it's a forensic accounting solution. So right now we get companies like Atari, we're talking to Kodak, CVS is talking to us. We got mainstream companies coming to us and says, wow, this technology is great on the blockchain because you can track things. Banks are using it. Now the crypto portion of it is the next step where you start trading these blockchain on exchanges. So I think this year is when the rest of the US will come in and say, can we take these tokens, loyalty programs, software solutions, and add value to our shareholders by adding more to it?
So obviously there are very legitimate reasons for doing an ICO, but what proportion would you estimate are illegitimate?
Look, the way I look at them today is like I did in the VC days. Does the entrepreneur have exits before understand shareholder value? Do they have a solid team, and do they solve a problem that we need to have solved? Until recently, that was really hard to gauge because they're all ideas starting to build something that didn't exist. But this year, we're going to see more of those, and it makes it more comfortable for me to look at them. The rest, such as Dogcoin, Jesus Coin, you got all these strange coins, and there's no business there yet. I would say, you know what? Focus on real businesses, and that makes my life easier too.
It seems like it's still the Wild West when we're talking about ICOs, and the SEC has said repeatedly that they should be registered with the agency. What do you think?
I think they're right. I think that the other countries like Korea and other financial markets have said too early to get attention that they're going to do this or that, and it made the market go up and down. SEC has taken their time, and they're right now clamping down. There were 80 subpoenas going out the last month, as well as they're telling exchanges they might be breaking the rules by having coins. There are technical securities according to SEC, but we're supposed to be utilities. They're shaking the tree, they're cleaning things up, and they're telling everybody we have rules in the US. The 33, 34, and 40 Act was created to make sure we don't get fleeced like the Great Depression in 1929.
Now, we've reported that Twitter is planning on banning ads that promote cryptocurrencies, ICOs. Facebook's done the same. Google plans to do it. What's the impact of all this?
It shakes out and removes all of the fake ICOs. I am completely behind it. I think they're doing the right thing. It also legitimizes my investments in media, my investments in advisory work, and everybody else is doing it compliant. It gives us more value by taking away all the easy ways to just, pump and dump. I mean, it's still not illegal to pump and dump in crypto, and it should be, according to me.
Well, fascinating insights. Thank you so much for your time. David Drake of LDJ Capital. Caroline, back to you.
Fascinating conversation, Selena. Thank you very much indeed. Now, we're coming up. Tencent's raking it in. That's what, thanks to WeChat in some part. We look at just how well the Chinese internet giant did during its fourth quarter. That's next. This is Bloomberg. Now, President Trump is planning to announce trade sanctions on China Thursday, this time amounting to $60 million worth over intellectual property violations. Last year, the president instructed his trade representative to investigate allegations that China steals U.S. intellectual property and forces American companies to transfer their technological know-how to Chinese firms as a condition of doing business in the Asian country. Now, the Wall Street Journal is reporting that China is preparing to retaliate with levies aimed at industries in states which tend to employ Trump's supporters. And sticking with China, big news for Chinese internet giant Tencent announcing on Wednesday that its profits doubled to $3.3 billion during its fourth quarter. A driver for growth continues to be WeChat. That's as Chairman Pony Ma pointed out.
Our platforms also continue to gather strength. Combined MAU of Weixin and WeChat increased 11% year-on-year to 989 million in 2007 and exceeds 1 billion after the 2018 Chinese New Year.
For more, let's bring in Bloomberg's chief North Asia correspondent. It's Stephen Engel live in Hong Kong for us. Stephen, talk to us about this. The profit goes up, but there's words of warning about that margin.
Yeah, I mean, Tencent still stuck to its bread and butter, and that is, of course, mobile and PC gaming with like Honor of Kings, and also leveraging off its more than 1 billion users in its WeChat social messaging platforms, also QQ, to drive that user base as well to other services that they are spending a lot more money to build out, to go beyond that core competency, like cloud computing, like artificial intelligence, like the financial services, the WeChat Pay, and the like. So the margins have been squeezed. Now, when you have more than 1 billion users on WeChat alone in the first quarter of this year, it kind of begs the question, and these were questions that were raised to Pony Ma yesterday here in Hong Kong at that news conference, and that is, is there a chance to have a security breach a la Facebook at Tencent? And this is what Pony Ma, or actually this is what Martin Lau, he's the president of the company, had to say, basically saying there's no chance that could happen.
This is, at the top of our concern, because we felt this is really our responsibility, and this is the basis of the users' trust with us. So that's why we have a lot of different measures, including technical measures to prevent the leak of data.
Now, a couple of other notes from the Tencent press conference. Another reason why the margins are being squeezed is costs soared about 72% in the fourth quarter as they've been acquiring more content in video and music. And also Martin Lau saying, the timing is getting closer to a possible IPO for its music division. Also saying that they could, if the market conditions are correct, return to China with a domestic listing, a CDR listing. But again, the rules in China would need to be changed for that to happen. But the Chinese government wants these big Chinese tech companies to come back and list on the mainland. Of course, Tencent is listed in Hong Kong.
Yeah, Stephen, it's fascinating, actually, how much Tencent is spreading its investment, even over here in Europe. I mean, just earlier this week, we've had Tencent put money into a fintech startup based in Germany called N26. And some of these then are listing and managing to contribute to overall profits. But you say about listing at home. What about the general focus of the business going forward? Are people worried about the investments that they do make in these areas?
Well, this is a heated competition with the likes of Alibaba, of course, to create this ecosystem, not only in China, but globally. Alibaba maybe has a head start on global, but, Tencent, they've acquired more than 600 companies, or acquired or invested in more than 600 companies. So they are definitely going beyond their bread and butter in gaming and social media, in payment and financial services, and in other developing parts of the world, including, of course, Europe.
Fascinating stuff. Bloomberg Chief North Asia correspondent Stephen Engel, thank you for getting up so early in the morning to join us. And that does it for this edition of Bloomberg Technology. And be sure to catch Thursday's show. Brett Taylor, the Chief Product Officer at Salesforce, is joining. He was previously the Chief Technology Officer at Facebook. And of course, talking of Facebook, let's have a look at one last chart for you. hashtag BTV9701. Sure, the stock has fallen, but still tech is trading at a premium. This is Bloomberg.